And welcome to another daily dose of insights powered by Container xChange. My name is Christian, and every other day we bring to you the key stories and data points that move container markets and hence your business. Another very volatile container trading week ends nears its end, so to speak, and I think we're all ready for the weekend. Today, of course, talk of the town is yesterday's investor presentation of Hapag-Lloyd. If you have a few minutes over a cup of coffee, I do suggest you read the transcript and have a look at the investor presentation. It's up on the investor relations website of Hapag-Lloyd. It does make for a very interesting read. Of course, old news, what's happened in Q4 and 2022 full year, record year, high earnings, high freight rates with sort of a dip towards Q4 last year. But the interesting thing is the outlook at the guidance for this year. Hapag-Lloyd has a very wide guidance for full year earnings just because of the high volatility in the markets. And it becomes very interesting if you look at what Hapag expects in terms of supply-demand imbalances on the vessel side. We all know that there's a tidal wave of new builds scheduled to be delivered in 2023. What we don't know is how many of those scheduled deliveries will be pushed into 2024 because of shortages of labor or materials or other process hiccups, and how much tonnage, how many vessels are going to be scrapped this year. Hapag expects actually supply growth to keep up with or be in line with demand growth at roughly 2% year on year. Well, that would entail the scheduled 2.5 million TEU fleet growth to be whittled down to just 500,000 TEU capacity growth. If you break that down further, this means that the scheduled deliveries have to be reduced by 1.1 million TEUs, so quite a significant slippage into the next year. And scheduled scrappings have to reach about 900,000 TEUs. So really a significant uptick in scrapping activity as well as slippage of TEU deliveries or capacity deliveries into the next year. We'll see how that plays out. If deliveries and scrappings don't reach those levels, we might see supply outpacing demand growth by double or triple the percentage growth of the demand side. So very, very interesting, very uncertain outlook for this year. Quite a few factors at play. And again, if you have a few minutes, do make sure to read the investor presentation of Hapag. It's actually really, really good read. On more positive news, our xChange sentiment index continues to trend higher, so in positive territory, meaning overall the market or market participants expect rates to increase over the near future, or at least there's a higher share of respondents who expect a rate increase versus a rate decrease. Maybe this is on the back of inflation numbers in Europe being slightly reduced compared to last month. Can also be because of positive sentiment at TPM in Long Beach this week, where overall, from what we're hearing, there's a relatively upbeat sentiment, positive outlook for the remainder of this year. So let's see what next week brings. Until then, enjoy your weekend and talk to you all on Monday. Take care. Bye-bye.